All right, good day to everyone. Sam here. We are let's see, we're January 2nd, mid-morning here. I had some members interested in an update on Litecoin, both to Bitcoin as well as the dollar. So I thought we'd go over this and see if there's a few things here to be learned, maybe some new opportunities setting up. So first one I'm going to show you, this is a trade that I was in that I got stopped out in. I want to be sure to show charts where, I get stopped out all the time. So I don't want anyone to ever get the impression that I'm cherry picking or that I don't, I occasionally make mistakes, have stops too close. I deal with all the challenges that we all deal with in the markets, and this is just a good example of that. So here's the count that I've been working off of, and here was the entry. It was just a little front run across the 618, anticipating that we had a 1-2 setting up, and stops just a little bit too close. So if you look at it, it was just a little bit of a spike down on one particular bar, took me out. It happens, right? So you try and be reasonable. This was, I was tight with the stop. And since then, here now, it gave a little opportunity to get back in, but that happened to be on New Year's Day where I wasn't really paying too much attention to the market and missed that opportunity to add it. So, that being the case, what do you do? So, it's not the only trade I'm in. I've got this in some other things. So, it doesn't ruin my day, but, I'd prefer to have, perhaps the right thing would have been to have that stop below the 786, but I didn't want to give it that much risk. So I'm out of this, but there is a new opportunity setting up here. So if we look at this, so if I take this off, right, and I've got some members that are still in it that didn't have that stop that tight, or perhaps we're trading it on a different exchange. This was somewhat unique to Bittrex, where we had that little spike down, and I'm sure that's a little stop running. So here, coming out of that now, it's okay. Well, you don't miss anything. You just look for the next opportunity. So here now we've got, you can see here a nicely defined 5-wave sequence here. It looks like we're double topping here, although it's too soon to really call a top there. So, now as I look at this for the next opportunity to get long, I'm just waiting to get a decent pivot there. And I like it right down here at the somewhere, anywhere in here between the 50 and the 618. Yet again, just like what I was trying to do here. Again, I would not give it too much beyond that. I don't want to risk that much. So I would be, right there with the stop, anticipating that if this is going to continue to move towards new highs, if this is my one wave, then going into my third, this is just the first of my third to the larger degree. So there's an opportunity to add here, or if you're still in it, or a fresh long if you're not, like I am, looking for a fresh long. So I get a nice little one wave. So in the context of this third, if we look up here, so I've got some decent targets here. So we've got this nicely defined 3, 4, 5. Here's that trademark shallow C that we see in crypto. At least that's been the case certainly all through 2017. We get another double top here. So note here, so we're getting this double top action here for the 1. We get the deep 2, and now it appears that we're doing the same kind of thing here. We're double topping into this 1. So if this is going to play, so there's a 1, potentially 2, 3, 4, 5 going higher. Let me raise that degree so it makes a little more sense, and we'll go to blue. Okay, so if this is going to play, then all that's happening here is the one wave is going in of the third. So of the larger degree here, so targets are much higher. So we can look up here. So here's my third way up here. So now on this scale, I'd have to move all of this over. Let's put that back in white. Okay, so if I've got a 1, 2, 3 potentially setting up, then I'm anticipating subdivision, right? It's not going to go straight. So we're likely to have this set up and give us the kind of subdivision that we like. That's the advantage of Elliott Wave, is that we can fine-tune the entries based on how the market is unfolding. So given that we have a clean 5-wave impulsive structure, 4 doesn't overlap the 1. We've got, at this point, what appears to be a double top. Any sort of pullback here is an opportunity to get long. And, again, the target would be up here for the third. So if we can catch this, and we don't know that we will, so we oscillators, you know, we're a little hot here. So there's a reasonable potential here that we get a pullback into this zone. That would be the sweet spot for a second wave, and that tees it up for a 3, 4, 5 into potentially the third of this leg here. So if this is going to play, this would be our 3, 4. Here's our fifth up here, our target up here. So if we're going to get a 1, 2, 3, 4, 5 into the fifth, that lays out rather nicely. So sure, I would have liked to have still been in it, you know, and been in a nice profit. Stop could be moved to break even. But, you know, that's trading, right? It's always a question of risk reward. I didn't want to give it too much risk. You know, over the holidays, you know, I wasn't sure what the volume was going to look like. So a little spike down takes me out. So now I just sit patiently and I wait for the next opportunity. Bullish 5-wave structure still intact, and nothing to suggest that this won't play. So it's really just a question of where's the next opportunity to get on board. So I sit, I wait, I alarm it. You know, now that we're through the holiday season, we should see the volume start to pick back up. Things start to move more technically. So it's a hurry up and wait here, looking for that opportunity. So I just set an alarm at the 50 and evaluate if and when it gets back down there. See how it looks. On the larger degree here, looking, you know, you can pull. I'd start here at this pivot low for the pitchfork. So I'd start it here up to the 1, down to the 2. You know, so I like all of this up here. These are reasonable targets up in this zone. You know, you trade it until it fails. So with that, if we get that opportunity there, this would be the first place I'd anticipate some resistance. So, you know, depending on the timeline that it takes to get there, that would, you know, here's a reasonable roadmap right there to come up and complete that fifth. If it's going to stay within these median lines, that plays just beautifully. All right, so let's go look at it against the dollar. Now, a lot of people, and a majority of my members, are trading it against the dollar on GDAX. So here it is. Now, this is a trade that I am in and that I've got members in. And you can see it was essentially the exact same approach, right, which is I always emphasize. It's the consistency of approach that is your advantage. So just as I was trying to do in Bitcoin, we did get this big spike down. And this was a trade I was in earlier. Me as well as several other members, we all got taken out on that spike, right? And that was, what was the date of that? I remember that night. That was the 22nd, where we had that big spike down. So a lot of people got taken out there. So it's the same process here. So you get stopped out. Okay, right? I mean, nobody likes it, but it's just the reality of trading. So you sit and you wait for the next opportunity to get long. It's almost identically to what we're trying to do against Bitcoin. So we get so you get the spike down, stops or run, people are taken out, you get the reaction, right? So likely that's algo activity. So we come back down, where do we go? Right to the 618. So we get this overlap here. So you see this huge confluence zone right here where we've got multiple 618s. From the 2 low to our 3 high, we've got the 618 there, but then from this pivot here up to what is currently labeled as the 1, we come down, we get this big confluence. So the first entry was here at the 50, because you don't want to be left out of the trade if it's not going to get to the 618, and we had the median lines there. So my first entry was a front run on the 50, giving it more room now, giving it to the under the 786 for potentially a deeper 2. Second entry is at the 618. So that's a nice way to average down your price. So the first bite is not, you're not all in with your entire bank towards the trade on the 50. So it's I will often call it, it's like an appetizer, right? So I'm just taking a first bite here at the 50, and then I want to see how the market responds. If we come down here, this is a chance to add again. Now I've reduced the amount of risk because the distance to the stop is the same, but the upside is a little bit higher. So I've got an average down price. So it gives, essentially you're splitting the difference between the 50 and the 618. So now this is off to a good trade. So already compensated for the loss that we took against Bitcoin. And now it's the same kind of thing. It would appear that this would just be the one wave. So if I zoom in on this, potentially we're putting in some sort of a 5-wave structure here. So this at this point looks like a diagonal. So wouldn't be surprised here to see a little pullback, but that can be an opportunity to add. Now, I've got a fairly good sized position now with this here. So a couple of things. Good time to tighten up the stops. No reason to go too far beyond that. So risk reduction, I like my average price, so I can reduce the risk. All the upside's still intact. So if that's going to play as a leading diagonal as the one wave of my fifth, the expectation is, if indeed I've got my pivot here, I'm just going to work from the low of the one up to the fifth, if that's going to play. Leading diagonal, so I would anticipate a little ABC coming down. So there's an opportunity, if someone really likes this trade, to get an additional add here for the second, right? So if you liked it, let me pull back out. So now it's just a question of money management and capital allocation. So if you liked it here, on the assumption that this is a 1-2 and that we're going to go up, you see here's my 3, 4, 5. Well, there's no reason not to look for an opportunity to add it here, unless it's just you're over allocating capital to the trade. There's no reason not to add some here if that's going to play, because that's just your next opportunity to get into the Elliott count at a reasonable place. So we've lowered our risk on the initial trade. We've got a fairly good position splitting the difference here. Here's an opportunity to add a bit of it here at the 50 to the 618, keeping the stop right there. So you've got all sorts of potential there. I mean, there's no reason not to add here, again, unless it's just a matter of over allocating capital. If you liked it here, no reason to not like it here. Right? So this potentially, with this very large pitchfork, we've got some big targets up here now that we're moved over. Not unreasonable to redraw from this, if this is my 1 down to my 2. So that I might play with that a little bit and see how the market responds if I go over to a shift, see what that looks like. That's kind of interesting here that we've got the first algo target up here at 364.50. That might be a place that we would. So if we're going to get something like this, if we get the opportunity to add here, so the expectation would be, come here, we'd go from here. So that plays rather nicely as a potential next resistance point as we come up to the lower parallel and then on the shift median line. That's a likely place to see a little bump. And then again, this is what Elliott will give you the opportunity to do. If we get a retracement there, then that's the next opportunity to add. So you get the maximum benefit from this. If it's going to follow this roadmap, these are each opportunities to increase your position without increasing the risk dramatically. So this can be a small add. Now here you're adding with a fairly substantial amount of profit. But still, as long as the count stays intact, if you liked it here, you should like it here. If you liked it here, you're going to like it here, because that's your fourth going up into the fifth. Right? So that's how you get the maximum leverage out of a trade when the market is following your roadmap, when it's following the Elliott count. And there's no reason to assume that it won't until it fails. So if this is going to fail and we head down here, well, you're stopped out, on to the next trade. But you've been able to get in, add a little, keep the risk reasonable. Right, so we can look at that in terms of percentage risk. That's modest, and you have the opportunity to continue to leverage as it climbs, if it climbs. Right? Okay, that should give you a fairly good idea of how to approach Litecoin, at least how I would approach it and how I intend to approach it. So it's a wait and see on Bitcoin, already in on the dollar. So we'll look for the next opportunity to add. Okay, guys, I'll wrap it there.